Well, Citigroup CEO Vikram Pandit appeared on Cavuto last month, the day he took the top job. At the time, he wouldn't say he would cut the dividend, but if you listen closely, he didn't rule it out either.
The dividend is sacrosanct. We're not touching it. But you've been given this enormous power to come in and, I'm not saying to Bigfoot them, but to at least look at the dividend, right?
The board has made that decision, and it's the board decisions. As far as I'm concerned, my job is to focus on productivity, making sure the businesses are positioned well for the future, and focusing on the talent we have and the culture surrounding that talent. I'm going to do that. That, to me, is what's going to create returns for the shareholders.
All right. You're very good at this interviewing thing, by the way, Mr. Pandit. But to that point, is it fair to say, because of the board's statement on the dividend, that you are against, Vikram Pandit is against cutting that dividend?
Look, I'll be very clear. It's the board's decision, and they've made that decision. Okay. And I'm going to just leave it at that.
Well, he may have to do more than just leave it at that eventually. Now that the dividend has been cut, is it possible that might eventually make the stock more attractive to investors in the long run if Citi's able to turn things around? We've got our Fox panel here to talk about it. Terry Keenan from Fox News, Tom Atkins from Remax Fairlawn, Alex Markels from U.S. News and World Report, and Peter Schiff, author of Crash Proof. Terry, first to you, clearly the market, I mean, Citi is down 7% today, did not see this as good news, clearing off the table.
They didn't see it as good news because in addition to the subprime mess, they're starting to have problems with their credit card portfolio. Delinquencies are over 5%. I wrote about this in the New York Post last week, and this is the next shoe to drop because these credit card obligations have been securitized. They've been sliced and diced. It's the new
just
subprime.
Like the mortgages.
And I think they're going to have to take huge charges for that going forward. And Meredith Whitney, who's been dead on about this, thinks that the charges could go as high as $10 billion in addition to what they took today.
Meredith princes out Whitney, yes.
Exactly.
All right. Well, Peter Schiff, you've been talking about this credit card problem for a long time. Explain how Citi's now embroiled in all this.
Well, I mean, it's the same problem, but I think the credit card problem is going to be a lot bigger than simply the mortgage problem as far as the typical American consumer, because it's going to affect everybody, not just homeowners. And it's my feeling that before the end of the year is a lot of Americans are basically going to have their credit cards taken away from them because lenders are going to dramatically reduce their credit lines, and people are just not going to be able to buy things. American consumers are not going to be able to buy anything that they can't afford to pay for with cash. And as far as, Citicorp stock, and people are thinking about buying it as the bottom in, I mean, this stock's going to keep falling. I mean, it's got a long way to go. I wouldn't even think about buying the stock right now.
Tom, I think back to Warren Buffett. In December, a lot of folks were thinking maybe those financials have come down enough so that Warren would get in. He didn't. It took all those sovereign funds from the outside. Once again, looks like he was right.
Yeah, I'm looking at Citi, but on one hand, it looks like a bargain because you're looking at somewhere between 7 and 9 times earnings. You're thinking, that's great, but the problem is, where's it going from here?
Yeah.
And it's scaring people. Like, they've written down $10 billion on the subprime. There still might be more to go. And Peter could be on to something here because the credit card issues could be greater than subprime. There's a lot of money out there. And at the same time, if this really is the bottom, and some people are fishing, look, Sadie Wiles buying it right now. And the reason for that.
By the way, Alex, these are post-tax losses. That is, the pre-tax losses would actually figure a little bit higher. In fact, in some cases, a lot higher, correct?
Oh, yeah, well, we're talking write down. But let's just step back a bit. It is the case that over a long period of time, at least over the last 8 months or so, what we've heard is the worst is out. Go ahead and buy on the news. Mm-hmm. I mean, in an up market in general, it's been buy on rumor and sell on the news. There's going to be a bottom, and it's going to come relatively soon. The amount of pessimism out there is stunning. And my own feeling is that this is probably a time to start at least looking at where you want to get in.
Well, Terry, I don't want to give Peter Schiff any more ammunition than he already has because he comes loaded.
I'll give him some ammunition.
All right, give him some ammunition.
Tom says, well, the Citibank stock's only trading at 7 or 9 times earnings. That's what financial stocks used to trade at before they became all souped up, and started to do all these other derivatives and started to get income
from all the hedge funds used to do.
From all these other sources. And, the next shoe to drop I think, is going to be the leveraged buyout loans. All those companies, $1 trillion worth that were taken over, those companies are going to be having the same problems as the public retailers and the public home builders and the
Would
public
that be even more cash
companies.
than
do you
what we've
think
seen in the
Citigroup's
mortgage?
gonna
Hold
go
on
out
a
of
second,
business?
Peter. Would that be even more cash than what we see in the mortgage-backed securities?
Well, I don't know if it'll be more. The credit cards are about $1 trillion. There's about $1 trillion worth of credit card loans out there.
Yeah, go ahead, Peter.
Well, you're talking about, though, the immediate impact on our consumer-based, bubble economy. When Americans can't use their credit cards, that it's going to have an immediate impact on, everybody's sales, and then a lot of people start losing their jobs because no one's, shopping in their stores, and so now they can't even pay their mortgages, even if they got a fixed
Peter,
rate.
the problem with when you say things like somebody's going to, it's not no one shopping in their stores. Not everybody's going to lose their credit cards.
I'll be shopping, I promise.
Isn't it only going to be, Peter, those who can't pay their bills? And frankly, that's a fraction of the total.
No, but there's just too much risk. There's too much risk lending money to people to go out and buy, furniture and television sets. I mean, this whole thing I spoke about on the show before, consumer credit from an economic point of view makes no sense.
Yes, but
we
Tom,
shouldn't be extending credit to consumers.
most people have good credit. While it is frightening how many people are going through bankruptcy or the motions of bankruptcy, most people have good credit.
Most people have good credit, but if things slow down, most people will stop spending quite as much money.
But most people are probably one paycheck away.
Make a mistake, and then on the other hand, you have people who simply just will stop spending, even though they have good credit.
I want to go back to our optimist, our lone optimist, Alex. I got to say, I got one email saying that the fact that the dividend was not cut 50%, which is what a lot of people were expecting, shows that Citi has, quote, not yet confessed to all of its sins. Agree or not agree?
In 1975, General Motors cut its dividend and the stock tanked. At that time, General Motors was a buy because over the next year, the stock doubled.
All right. Heading off the pass is not necessarily
so that's
a bad
your
idea.
logic for buying.
That's got to be the last word. Gang, we'll come back to this.